Joining me on the podcast right now and live on video as well. By the way, if you want it on video, subscribe, hit that notification bell, and you get Paul Hill, full-time equity analyst, full-time investor. You all right, fella?
Yeah, happy New Year, Justin, and morning.
Yeah, happy New Year. The market started off a bit dodgy for me first few days, but it's getting better. Yesterday and today, it's getting better, I find. And I know the banks, I don't hold any banks, but I know you hold some banks. But I've seen HSBC yesterday. I mean, the stock market, the FTSE was up by about close to 4%. A lot of that was down to oil. But didn't the banks rally as well?
Yeah, absolutely. I mean, a lot of it was down to what had been happening over in the States because we've had that Democrat sweep in Congress. They've overturned the Republicans in Georgia. It's meant that actually, the investors are thinking there's going to be one massive mother of all stimulus plan when Joe Biden comes in a couple of weeks, and we're going to get through this sort of like difficult third wave of the coronavirus, and therefore you've actually seen the US 10-year Treasury steepening, which means that banks make more money now because they borrow at sort of like 0% and can lend at 1%. It's the first time it's gone above 1% for almost 12 months. And what's actually happening is that, that's going to be good for the US banks, but also investors are thinking, look, the US is sort of 6 months ahead of the rest of the world. And it's going to happen also in the UK. So that's why the banks rallied. And the other thing you also get is if you're going to get massive amounts of money printing and stimulus out in the US, then the dollar's going to continue to weaken, and that's what boosted a lot of the actual oil stocks, along with OPEC or Saudi Arabia saying it's going to keep tight on the oil market. So it's quite an interesting play actually, because what that means is that what we've discussed about that whole recovery play, even though the next 3 to 6 months might be a bit tricky. It means when we get to the second half, assuming this third strain doesn't mutate its spike protein such that it can circumnavigate the vaccine efficiency, assuming that's not the case, which would be a total black swan because it would mean we'd have another pandemic, then we should have a roaring, and they've been always saying this for some time, a roaring 20s again, which was like 100 years ago.
Yeah. And talking about macro, like you said, but on the old vaccine thing, I think I was listening to the guy who's head. I can't pronounce the name, unfortunately, but he's vaccine minister, and he was very confident yesterday. He was doing the rounds on talks, on all the talk shows and all the breakfast shows and all that stuff, and he was saying it does 13 million doses seems like a massive target, and it is. It's the biggest vaccination program we've ever seen in the NHS ever, but we do have the network there now with AstraZeneca and Oxford, of course, only needs to be refrigerated in GPs, and they all have those kind of fridges. He said, and we've got a network there. We're getting GPs up this week. He said from Monday to Monday, you'll see a massive uplift in vaccinations, and the Monday after, because then we're going to pharmacies. And but he reckons he's confident that we'll get, and that's about it. Did the maths yesterday. So they've done 1.3 already million people, and they're hoping to get 13 million by mid-Feb. That's 300,000 a day exactly. And so, but he's quite confident they'll do that. And I think I was looking at, I'm charting at the moment, keeping an eye on hospital admissions, COVID related, and that's really topping out. We're at levels now, because there's no point looking at deaths. Deaths actually coming down, because we're dealing with it a lot better. And if you look at hospital admissions, it's going up and it's peaking towards 3,000 people. I think it was yesterday, which was close to the peak back in March. But it takes about a month, even with lockdown. It takes about. I know this is not a harder lockdown as last time, but if you look at the chart there, it took about a month from the peak to coming back down. So
you reckon sort of by the end of January, then we should be in a better position?
Back down the other side, but with the vaccine as well now.
So you reckon by the end of January?
Hopefully, I know this. Yeah, this variant is saying is it's more contagious, but with the lockdown and the vaccines, I think towards the end of January we're going to start to see those figures coming down. I think, and then like I said, mid-Feb. I mean, the stock markets always work ahead, so I think once people see those figures start coming down, I think stocks, especially the stocks that have been hammered, the leisure, the hospitality, the travel stocks, even banks, I think will start to rally. And then we may have a decent. Nothing ever goes according to plan. We're all thinking 2021 is is
Yeah,
going to
I
be
know.
a massive rally here. There's got to be something go wrong. It can't just. I saw a comedian saying, 2021 is the exact opposite of 2020. We started off in 2020 with 3 good months, then a rubbish year, and then this year's going to be 3 bad months, then a good year. But we'll see. I mean, hopefully that's the way it plays out. Who knows? You can't second guess stock market, really, can you? So, but hopefully that's the way it plays out.
And also the other thing to add is that single shot strategy that they've decided to do, i.e. to inoculate as many people as possible first off the bat and then wait for 12 weeks seems to be a perfect strategy, because if the trial data comes through that effectively the efficiency is 100% for stopping people going, for hospital admissions, and that's what it was in the trial data when they did a 30,000, phase 3 trials, then that means by inoculating somebody just with that single shot, you actually stop them going into hospital, which is really the key sort of like log jam for the NHS. And I think your timescales are perfect. I mean, I'm working off to the same sort of thing. Give the lockdown a bit of a chance. Hopefully we can get it under control by the end of January. The economy can still relatively tick along, other than those ones which are really sort of like hit badly. Yeah. And once we've actually, because I think the target is 25 to 32 million people to be vaccinated by spring. And if that occurs, and it's most of those which are vulnerable, then, hey, the schools can go back and universities can go back and we can all start enjoying ourselves.
Yeah. I think there's a difference between people saying, well, it won't be till the end of summer till we're all vaccinated. But we don't need to be all vaccinated. That's the thing. It's affecting a lot of people. But the people that are taking up the beds are those vulnerable groups. And once you protect those, then we can, the NHS is protected then, and so we can open up the economy. That's why we're locked down, So, I think, honestly, within 2 weeks, we should have hit the peak, because, after 2 weeks of lockdown, obviously, it takes for that long to transmit, and, of course, over the summer, over the Christmas holidays and stuff. So, yeah, hopefully. But you know what's odd, though, looking around the world, it's the vaccine race now, and I think Boris Johnson is trying his best to win something here on COVID, and so if he can win this vaccine race against every other country, he said, "Listen, I did something positive during this pandemic, because let's be honest, he's behind the curve on pretty much everything. He said it was safe to go to schools. I want to know what changed in that day. On Monday, safe to go into schools, 8 p.m. Don't go into schools. What information do you have that changed it so radically?
I don't think he was actually saying schools. I think what he was actually saying, it was that secondary transmission, and it was that third strain, the South African strain. What is quite important, I think, as well, is that a lot of investors who are following this also hold COVID testing stocks. And what that means, this new strain, it's not only super contagious, but actually it's ultra fast mutating as well. 23 mutations, variants have already, and there's thousands around the world. So what that means, if you think about it, is such that going forward, we're going to need an ultra sensitive alarm system across the world. Whenever we get a South African variant, we need to be able to respond, sequence it, and tweak the vaccine if we can, super quick. That means you're going to continue to have mass testing of the population, and probably, both antigen and antibody, because antibody testing is going to be needed as that vaccination passport. So this whole sort of doom cycle that there's going to be no testing going forward is just not going to happen. We're going to see, because of the super fast mutations, which was not built into most people's models, and certainly wasn't built into mine for coronavirus 6 months ago, means that we're going to need a lot of heavy lifting on that testing to provide the authorities with quick fire response. They can then adjust the vaccines to make sure that we all stay and survive. Yeah? Justin?
Yeah. So you dipped out then. Yeah, absolutely. And no, I think that's true. What I said with caution to people who are investing in COVID stocks to just do COVID testing, if they haven't got commercial contracts right now, that's quite worrying, I think, because the NHS, I think, they have their preferred supplier list and all that stuff. And if they're not already have a contract from the NHS and other people, then that's quite worrying, I think. And if that's the only play they have, then, that's a bit worrying. Because I think the sentiment will, and sentiment plays a lot of, big part in the markets. And like I said, they rallied. Those COVID stocks were super hot when we realized we need to test. We need to test. Testing until we get a vaccine. That's all we have is testing. And now we have a vaccine. It's a two-pronged approach. So the heat has gone out of testing stocks a little bit. So unless you have that, that revenue coming in, it's a bit worrying, because there are some stocks that they're still hoping to get contracts. I think they're leaving a bit late, because there are other companies doing well. Like Novocyte, for example, is doing very. I think Source Bio as well. But those guys have contracts already, and they're doing quite well already. So the others may get left behind. So and also, they've got to have a different. If there's one approach strategy, that's COVID testing, it's a bit worrying if that falls over. They've got something else to go with it.
I agree. To be back in a few more horses, then it's always good, and get a bit of diversification and spread. I mean, just on that, and also on the sort of the macro side. I mean, I think again I'd point investors, because I was absolutely privileged to host.
I was going to say, it took my macro list.
This macro investing masterclass with James Bevan, James Athey, who's a bond guy, and Colin McLean, who are real heavy hitters in the fund management industry. And what you learn from those guys is as much about how their brains work, because it's just, the super high level in terms of top down and, sort of understanding the macro and asset allocation, but also very much detailed and from the bottom up, and distilling that sort of. I recommend investors just watch it, because, I was fascinated, and I've been investing for sort of 30 odd years. And the key takeaways that I had was that the big sort of like trends for this year to watch for was certainly continued dollar weakness. And that's going to be mega in terms of boosting potentially boosting emerging markets, because you saw that sort of 15 years ago as the dollar weakened, you had that huge carry trade. And that will lead to inflation, hence the whole recovery. You've got a sort of the still steepening yield curve, which again will be boosting inflation. And these guys were actually saying start to think about, and they've already doing it just in their portfolios, into these rotations. So you had people talking about you had Colin suggesting going into the low cost airlines. I know you'd gone into EasyJet sometime. They were saying sort of Ryanair and Wizz Air. Also the house builders. You had James Bevan talking about the US banks, because they were up sort of like 8 or 9% last year. So it's a really fascinating way for investors, if you're not familiar with it, looking at the top level, bringing that macro sort of bird's eye view, and then dovetailing it with the ultra detailed stock picking, the kind of stuff that you do every day, Justin, and it gives you that confidence that the backdrop is supportive for these businesses to do really well. So I would recommend. I mean, I've watched it actually twice, and I hosted in it just because I found it that interesting. You learn so much from these guys.
You sit there thinking, I'm looking very good there.
No, I certainly don't say that.
Very sharp.
But it's because these guys use, they say things in a sentence, and actually then you start thinking about what they actually mean, and it can go straight over your head. But the second time and third time you watch it, it's like watching a really good film, So
Well, no, I mean, these guys, they've done it all their life. They're super professionals, aren't they? The guys out there who invest, but these guys, have done it very well. And so you have to pay attention to what they're looking at, and you learn from it, And like I said, I think I've never been so conscious really in the last couple of years as to sectors and trends.
Yes.
And I think, when you're in a good trend, all boats sort of rise there. And especially now, there are certain sectors that have been hammered in this COVID, and they haven't recovered. So, it's still plenty of time to jump in. And at the moment, one of the ones I keep banging on about, that obviously people, oddly, the average private investor will only jump on a share price once it's risen.
Yes.
And once it's risen, it gets a lot of heat, gets a lot of coverage generally on social media, and then people jump in. But you've got to understand, it's best to do the research beforehand and, form your opinion before everyone else and get in there and then just wait. Wait for the tide to rise, because,
Well, one of those.
I've been banging about escaping for a while, because they've just done now. They've got. No, I'm just saying it's a leisure stock. They've just got money from the Chancellor. They've raised money anyway, so they're okay for cash. They're burning very little. They've got furloughed staff, but they've also come out with this digital strategy that basically they did in one game in December. Right, first of all, they did was it 1,000 games, corporate games, pretty much.
Yeah,
6,000 people took part, but in one game. they doubled their physical site footprint in one game. They hosted one game with 350 people in it, and it was across 2 nations. I thought that's 57 games, which is pretty much as many rooms as they have around the UK. And I thought, if they can do that, that is a blue sky opportunity. So there's that. There's also the fact there's leisure. There's also the fact that their physical site has increased by 36% since their lockdown, and even then they had like-for-like sales up 55% before the lockdown happened. So it's a growing company, and there's some leverage to the open economy, but now they have a digital side to them. But of course, because the share price hasn't gone berserk, then people don't jump in. But once the share price goes berserk, that's a bit late, So, yeah.
I mean, again, sort of like just illustrating that strategy of getting in early is equals, because yesterday he put out a really positive trading update. And I know I've been banging the table about this one before, but it has reached, and it demonstrated it yesterday, it's reached a tipping point. It moved into EBITDA profitability, and what actually happened is that its revenue went up by effectively a million more than expectations, but its profits, its EBITDA, doubled off the back of it almost. And what you saw was huge operating leverage. So it's going now through it's the archetypal platform stock with 60-odd% gross margins, EBITDA drop-throughs of sort of 45%, as you put it, and so every incremental pound you put on the top line, you're going to get about 45p coming through to the bottom. Next year, I mean, they've just come through a really tough period. As I think you spoke to Ian Strafford-Taylor yesterday, the CEO.
Yeah, well, it was a tough period in a tough period. So I mean, they've come through, exactly more bullish than they ever thought they would, or done better than they ever thought they would. Yeah, and now there's, like I said, it's a very similar analogy to the general economy lighting the tunnel here, but and yet it's lining up for them well, isn't it?
But the key thing, if the investors take one thing away for Equals, it is a bank grade technology platform. And I underline the word platform, because what that means is every single incremental pound is going to get 45p drop down to the bottom line. You saw it yesterday with the trading update. Now they might well have a sticky first 3 months, because their comparatives are really tough, because they had a booming first 3 months in 2020. But given that, afterwards, it's going to absolutely race. And this B2B play in the SME sector is pretty damn unique. And we just proved it, because they signed that contract with HomeSend, I think it was in November. And that's a joint venture with MasterCard, who wanted to use their platform to basically do business-to-business payments in the UK. I mean, it's phenomenal, absolutely phenomenal. If Ian and Richard, who's the CFO, can carry on generating that top line, you're going to see a money machine here, and it's still only. I mean, what is it, 32p? I mean, I put a conservative valuation. I upgraded to about 67, and it still wouldn't be expensive. So I would say, if you haven't had a good look at it, kick the tires on this potential. This is a high operationally geared, effectively profit machine for every incremental pound, and it demonstrated that yesterday with its trading update. And the other thing which is really good is that even though they're starting to the tip point, you probably got the the indication yesterday when you spoke to Ian. They've really got their finger on the pulse to come out with profits and sales 2 days after the period closed, trading days. It's just tells me that they really have a firm grip of that business and all its costs. And the headcount's down by 25%. They are absolutely nailing what the operations of the business and the revenue side. And if you have an increasing revenue, a reducing cost line, that only means one thing. It's going to go, the profits are going, and the cash is going to increase.
Yeah. Well, no, exactly. The point that he said yesterday. He said, it's one thing to cut costs, but if your revenue's going down, it doesn't do anything. So we are, the revenue's gone up, and we're cutting costs as well. So yeah, it's definitely heading in the right direction. What's nice though is you did some deep research on that a couple of months back, wasn't it? And probably about 4 or 5 months back now.
Yeah.
But and when you do research and you see things changing for the positive in something, but you'd only see that if you did some proper research. And I'm saying sometimes I just genuinely think when people ask me where to get ideas from, I basically read. Just do some reading. Reading's free, and it's amazing. Just read up stocks and then collect things together and look at this. And the more you learn about company, and then so it's like I said, you were sort of banging the drum on Equals I'm doing it with a couple of other stocks as well. But
yeah, I mean, just
it'll happen. The share prices start rising, then other people start paying attention. But then, why didn't you pay attention like 6 months ago or 3 months ago? Why,
Yeah, I mean, again, exactly an example of that one, Justin, is your stuff on the electric vehicles.
I was late on that though. Do you know what? The annoying thing was
not too late.
No, I know. Listen, there's still like 10 years at least of trend towards EV. I know, but the annoying thing is I had Ilika on the podcast, right?
Yes.
And it was literally I think back in the summer, and they said there were solid state batteries, right? And I looked at their final results, and they could charge 6 times faster. They hold charge but 5 times. They're non-flammable. I thought this sounds too good to be true, and I did a British. I thought that's good. They were based in Romsey. They were just over from not far from where I live.
They're a spin out of Southampton University, actually.
Yeah, exactly.
The same university that I went to for electrical engineering.
I emailed the guy there, Professor, who was the founder, and
it's Graham Purdy, isn't it? The CEO.
CEO, yeah. But Professor Brian, I can't think of his surname, is the founder. But I thought, is it true that a company just down the road from me, a small company, could hold, what are the keys, which has been the problems to EVs, which is anxiety, range anxiety, and fast charging.
And flammable. I mean, both.
Yeah, and flammable, yeah. And so, a big article in the Wall Street Journal, I don't know if you saw it on the...
I did, yeah, I read it.
Basically, and I did a week previously. I did a comparison of. I said, right, here's Tesla. This is why they're the price they're at. Because how do you price in the future? And then they're only
worth $700 billion. Tesla.
Yeah. And then there's this company called QuantumScape, pre-revenue, do solid state batteries. And there's basically an article saying that Tesla's batteries aren't as good as QuantumScape. That's the whole thing. Tesla's going to have to do something or change the solid state. Even though Elon Musk, obviously, he's not going to say that, but they're going to have to. If they improve the range and the charging and the safety, they have to go to solid state. And QuantumScape was there. Now it's just dropped a little bit in price. It's now only worth 25 billion with no revenue whatsoever. And then there's a quote from Graham Purdy a bit further down. And I know. This is basically what I did a week ago on my video presentation.
Yeah.
And he was saying, and if you look at the developments on their presentation, there's going to be no revenues from QuantumScape till 2026, pretty much. Now, Ilika's planned pre-production line goes into production in 2023, and they're getting revenues 24, 25. So they're even ahead of, and even Graham Purdy said, our tech, I haven't seen anything from Quantum that's more advanced than ours. It's very similar. And so it looks like they'll be in production before QuantumScape. Of course, Quantum have Bill Gates and Volkswagen as backers. Ilika's got me. But I just think I've never seen a trend as strong as EV. Let's be honest. I don't know if you saw the car sales yesterday, but EV for the first time in the UK beat diesel sales. That's phenomenal. Wow. I know diesel sales dropped, but they're like off the forecourt in was it December or November? But off the forecourt, I think it was November. But there was 22,000 EVs sold, 15,000 diesel cars sold. I thought, okay, diesel's had a hammering, but that's still a milestone. That's just, I mean, I think adoption of EV will be a lot faster, and the more money that piles into it, we'll get, the tech will be better. There'll be, bigger range, like solid state batteries coming in. The bigger charging will be 5-10 minutes probably, and even less than that as we go on. But I think adoption will be faster now because we realize, you can't buy. Is anyone going to want to buy a car? In 5 years' time, that there'll be less support for, like a petrol or diesel car, because that's what's going to happen. There'll be less.
No, I mean, I've already said to my wife 2 years ago, the next car we're buying is electric.
Because there'll be more support from that, and the more infrastructure, and so I think adoption will be a lot faster, and I think this trend is a huge trend, and I had to have some exposure, so I bought TrackWise and Ilika. Ilika's gone berserk.
Did you recommend it just before it went from a pound to £2?
Yeah, well, I was slowly accumulating here and there, and my average was about just under £1, and then I kept saying I'm going to reveal what my second of my EV plays are, which I did. I revealed TrackWise first of all.
Yeah.
Soon, but I said the share price has gone up. I'm going to come back down. It did come back down, but it didn't really go anywhere, and it kept holding. And I thought this is very well supported here. It's not going to go any lower or anything, but I thought it was going to go lower, but it didn't. Then all of a sudden, it started to move. I said, well, listen, I'm going to say what it is because it's starting to move. And so I just went nuts then after that, because everyone sort of jumped on as well, and it didn't have. It's not obviously not a lot of loose stock around, and it just pushed it up. But yeah, but you know, I mean, it's going to go sooner or later. It's going to go, but they keep their head under the. I just think its nearest rival, which they're going to be producing faster than, is QuantumScape. It's typical American. You know, that's 25 billion in value. Now that's obviously super overvalued. But I say, even if you look at Ilika, you say, okay, 300 million is overvalued. It's very little revenue. But again, you know, if it is one of the players, there aren't a lot of solid state players around. But as far as I can see, it's about 12 to 20 around the world. So how do you put a price on them being one of the major suppliers? They work with Jaguar Land Rover and McLaren and Honda. How do you put a price on the future? That's why Tesla's risen so much, because it's basically the future. That's the price of the future. You know, and the PE will come down. Of course it will. At the moment, it's ridiculous on Tesla, but it'll come down as the share price sort of levels off and the earnings go up. So again, it's hard to value that kind of thing. But I just think as a trend, you shouldn't be out of it. It's something you should have exposure to. You know, electric vehicle batteries.
Yeah, I mean, I actually thought that Wall Street Journal article proved that it was a massive endorsement of Ilika's technology. Because let's be clear about it, it's worth about, I don't know, 130 million market cap business to get into a leading article in the US, the biggest US facing financial or investment newspaper, along the sides of Tesla and QuantumScape, given that America is so advanced in everything EV related, just shows you that actually they are one of the top boys in technology terms in the world. Because you know, Wall Street Journal would have done their research and gone through and spoken to a number of business, and to come to a little business out in England, in Southampton, is or you know where in Hampshire, is just a credit to the team down there. So
the fact they're working with, like I say, Jaguar Land Rover, you know, Honda and McLaren, amongst others, says a lot. But and even in that report yesterday, I think it was out when the car sales figures came out.
Yeah,
there's a guy from the Society of Motor Manufacturers saying we need 4 or 5, gigafactories in this country. So far, we've got one. We've got to get on this curve before. And I've forgotten the complexities now, but there's some kind with the EU. The deal they've done with the EU is that they can only source, I think, about 45% of vehicle and infrastructure outside the EU. But they have 3 years window or something to get the investment in there to sort this out. So they've basically got 3 years to bring on some big investment into gigafactories, and they need about 4 or 5 factories here. We've got one so far. Yeah. So of course, money's going to pile into it. So let's be honest, it's not a fad. Alternative energy, or non-petrol diesel is not a fad. It's going to be here for the rest of our lives. And there are other players, hydrogen, of course, but electric vehicles are the most advanced, aren't they? So
and I think your strategy of taking that sort of top macro view, what are the big, strong, long-term secular growth trends, and then dovetailing it with that detailed sort of like stock picking, means that you actually end up selecting companies that are are valued appropriately, lowly valued before they actually go pop. And that's quite a difficult one in the EV stroke green energy, because many of them have just moonshotted like Tesla and stuff. But if you select well, take the sort of tailwind of those secular trends and choose the right companies at the right price, then you eventually, as you say, if you're patient, then the actual price will move up to the value of that business.
Yeah, do you know, I've had a couple of people on my YouTube account saying, I'm from America, how do I buy these? I've never had that many other stock. And so they know out there that their plays are overvalued. So they're looking for exposure. And I think they are on the OTC market as well. I think.
Yes, they are. Yeah.
So I said, I think they're on the OTC market. So I don't know much about that. So, but so that shows you the hype in America. People are looking for, reasonably priced. Well, in fact, let's be honest, compared, when we talk about traditional valuation metrics, sometimes you have to throw those out the window because the trend is so big going forward that you think, well, you pay what you have to pay. Obviously, it's not a bonkers price, like 25 billion for a pre-revenue company, but a couple of 100 million market cap. It could be a lot bigger than that in the future. I mean, even I was comparing, like even fuel cell technology, Ceres Power. They turned over 19 million pounds last year. Made a 10 million pound loss. They're valued at 2 billion. So you're thinking, that's how highly valued this kind of alternative energy is. So there you go. So, So I mean, I just think sometimes it was trends like that big. You've got to get exposure. Any other stocks worth chatting about?
No, that's great. I mean, it's been a busy sort of first week, and it's going to get busier with all the trading updates coming out over the next few days. I've had a few on the retail side, but no, it's going to be a busy sort of like couple of months, I think, for everyone. So.
Yeah, do you know what? I'm looking. I find it very fascinating that Boris Johnson's nailed this target of 13 million to the mast, because we know they're not been very good with targets recently. They dropped them halfway through, but that's a big target. So, and the fact that they're so confident, part of me thinks I don't believe it, but part of me believes they have to do it. And if they do it, we'll see this. We'll see the hospital admissions coming down, plus with the lockdown. So I think, listen, and we should see it within a couple of weeks, I think, and hopefully, as long as what I just heard, I don't know if you heard about this today, but apparently lots of parents are sending their kids into school because they sent their key workers a lot more than for the first lockdown. How can you become key workers all of a sudden? Apparently, they're showing some as a guy on Radio 5 Live today say apparently his classrooms are 60% full, which is not going to help, infection rates, is it? Because
I'll tell you actually one thing. You just make a very good point actually, because top level for investors, fear is your friend, as we proved back in sort of March and April time. If it sounds as you and I on the same view, we're not going to sell any shares. If anything, if there's opportunities, we're going to deploy more cash and look for buying opportunities. If over the next three months there is a bit of volatility, some nice companies that you like fall down in value, in the share price, but the value hasn't decreased, then that's the time to buy them. It might be your last time this year if you get a bit of effectively favourable volatility, because the outlook for the market, the world, and for the long-term trends, it is positive. It's just timing.
No, I think we'll have a volatility, because what we'll have is this euphoric rise, maybe on the economy opening back up, then realizing, hang on, the economy's in tatters a little bit. It needs repairing. It's not good. It's not ready to run. It's an ill man. It's just getting out of a coma basically. So it has to build up. So I think then once we get over the initial euphoria of the economy opening back up and the vaccines working, maybe then we'll think, hang on, there's a lot of companies here now got extra debt. They haven't got the market they used to have. So I think then we have a bit of a sell-off.
Well, equally, a lot of people have got cabin fever, haven't you? We've all been locked up for 9 months. We're desperate to go on holiday and spend some money.
My missus is like booking. I think she tried to book about 5 or 6 holidays this year. I thought, calm down, and that's it. I think so. I think people will want to get out and eat, in restaurants and all that stuff, and visit escape rooms.
Yeah, exactly. Anyway.
Yeah, marvelous.
Have a great weekend, guys.
YouTube, by the way, if you want to get on YouTube, hit that subscribe button, notification bell if you want the next one to your inbox. Cheers, Paul. Speak next week.
Yeah, cheers, Justin.